Here we have the current stock market update for Super Micro Computer Incorporated, stock ticker SMCI. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So what we're looking at here is the 1 hour time frame. Each candle on this price chart represents a 1 hour trading period. And if we sort of pull back a bit on this price chart, we can see that the stock is really sort of flatlining or leveling off here at somewhat lower levels. So the main question that for anybody that's long the stock or considering any position in either direction, that would be bullish or bearish, what we really should be assessing here is whether or not this is going to be the bottom for the stock. If we look longer term, that we can see some major price movements here to the downside. The stories have been well documented, and I have covered those in prior videos, so we won't go over those specifically. But the real question is whether this prior movement lower has now run its course, and are we ready to start basing out for higher positions, higher share price valuations? So if that is the case, we do have to understand that since the stock has taken such a deep dive here, the risk to reward favorability here for a name like this is extremely high, because if we do look at 37.30 as the bottom here, we're looking at roughly less than $10 here really in share price movement to the downside as being possible. Now, is it possible that we move below there and break that low? Sure. Could more news develop with respect to this Department of Justice investigation and send share prices lower? Sure. Could we see an earnings report that's much more disappointing, and then maybe investors start to become more worried about possibilities of accounting manipulation, and maybe people start to pull their money out of the market? Is all of that possible? Yes. But if that's not the case, the potential for upside here is far more substantial than the potential for downside. Really what we're looking at the moment, I mean, if we were even to just move back to these prior highs at 96.34, for example, this would have been the price high during the July 12 trading session. So we're not talking about very long ago here. We're talking about a little bit more than 3 months, about 100 days ago. We were seeing share prices, at more than double the value. I mean, this is a huge difference here in share prices. So if we are looking at a possibility here of maybe $10 to the downside, what is the potential here to the top side? It's almost $50. So if that's true, if all of that is true, then that's a 5-to-1 risk to reward ratio, which is highly favorable. I mean, for the most part, what you're really looking for in any trade is sort of a 3-to-1 risk to reward ratio. So what does that mean exactly? That means for every dollar that you're willing to put at risk, you should be looking for $3 in gains, a potential gain of $3 for every $1 that you're risking. So that would be a 3-to-1 risk to reward ratio. And here, we're looking at a ratio of close to 5-to-1. That would be if we were to simply see share prices move back to where they were 100 days ago, the middle of July. So, there is a lot of upside here in terms of potential. And, the downside, could we see further losses here below 37? I would be curious to hear what people think about that. I mean, if we were to break below $37 per share, where would then be the bottom? Would it be $25? Would it be $20? I mean, what is the reasonable valuation here? So, at the moment, we can see that things are starting to base out here. I understand this chart is a little bit difficult to look at. But what we can see here is that we have started to post a series of higher lows and higher highs. And if we look at that sideways trading range, this does sort of suggest that we're doing something like this, kind of a sideways movement, trying to stabilize from all that turmoil and then trying to make a run higher here. So that is what you need to see in a situation like this. Whenever you see a stock that's just massively declining, Intel would be a very good example. We saw major price declines in Intel. Then you see this series of movements in the sideways direction. A lot of people on this platform really just kind of expect things to just go to the moon. We've got all this stupid terminology on this platform, like things going to moon. Like we don't even say the proper grammar. When will moon? Just this idiotic nonsense. Where people just sort of expect share prices to just rocket launch higher. That really isn't how this works. I mean, what you're more likely to see in a true turnaround scenario would be something like this, where you're seeing this kind of sideways price movement. You see a major decline, then a sideways price movement, and then we start to see a series of higher lows and higher highs. So this is a favorable outcome here. We're not seeing any tremendous movements in the upward direction, and it's a little bit concerning. We could start to see some retracement here to the downside. Mostly what I would be worried about short term would be a movement kind of into this area here. So if we do start to break through some of these sort of near term price levels, we could lose historical support around 44.10, which is a very important level. I would suggest that to be a bearish event. I mean, I think that if you see a break below 44.10, you're probably looking at a test of 39.80. And then if you did see a break below there, then I think you're probably looking at a test of those lows at 37.30. So that's sort of the sequence of events that could unfold here. And that's also useful, even if you're bullish on the stock, because these do represent areas where you can add to a position. You can sort of average down into these support zones because these could be turning points for the stock. So first, I would be looking at 44.10. I think that if you break through that area, I think you do start to lose some of this progress here that we've been seeing recently. This movement from 37.30. If we did see a break below there, you would start to lose some of that progress, and then we could see, I would start to be looking at 39.80 specifically. I mean, if this did happen, I wouldn't be buying into the stock unless I saw at least a test of $40. Then I think you could start to add to the position. But we're not there yet at the moment, and we are still seeing higher lows and higher highs. This is a bit of a disappointing rollover here after forming that higher high. We're just seeing this kind of boring price action at the moment. But what we really do need to see here is a more convincing break into this $50 area, because I do think that would really change sentiment for this stock. It would probably send a signal to the market that these major declines are over. The stock is stabilized. This is a serious company with very serious products that are centered in AI. And, then at that point, people might start to buy into the stock more seriously. So here's the current market update for Super Microcomputer, stock ticker SMCI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.